Hey guys, there is a common issue which is coming up these days that debt funds are basically facing an issue. There is an indexation benefit which debt funds are no more enjoying these days. So what exactly it is and how is it affecting the category is a question which is affecting or which is in the minds of a lot of people. First of all, what is a debt fund? Debt fund is basically a category of mutual funds which gives you a constant return over a period of time, and the return varies according to the interest rate cycle. These days, the debt funds are giving you returns in the range of 7 to 8.5% as per according to the different categories in which the money is invested in. The major benefit why the investors used to invest in the debt fund was that they were subjected to an indexation benefit. Now this is a very important question which is there into the mind of investors. What exactly is an indexation benefit? So indexation benefit is a benefit where after 3 years, in the case of debt funds, they were subjected to a minimalistic taxation because of which they were becoming tax efficient. So with an example I would like to tell you. Let's say a debt fund is giving you an 8% return and an inflation at any point of time is 7%. So according to the indexation benefits, you are subjected to an indexation of 20% of the debt fund return minus the inflation rate. That is 20% of 1%, which is almost negligible, as a result of which the debt funds were very tax efficient. Now what is the problem because of which the debt funds are in so much of news? This indexation benefit is no more getting availed by these debt funds after April 1st, 2023, which means that they will be subjected to the same taxation rules as what an FD or an NCD is basically subjected to. That means you have a flat 33% of taxation rule which is getting subjected on these debt funds, because of which there will be a flow out from the debt funds where the money will move into different categories, whether it is an equity category or whether it is an NCD or an FD, as per according to wherever the rate of return is higher. So different financial analysts and different people have a lot of views over these debt fund category. In fact, many financial analysts are very much anguished over the factor that by increasing the taxation structure of debt funds, the financialization of assets are getting reduced, because of which the debt fund will not lure the investors to a great extent. And at the same time, the debt funds, by increasing the taxation, will less attract people, because of which a lot of money will flow into the different instruments. And according to the Finance Bill 2023, not only the debt funds, but also the fund of funds, international funds, gold and silver funds are also subjected to the same rules, because of which they will be losing the indexation benefit. So the question is, what exactly is the Finance Bill 2023 which talks about removing out the indexation benefit? So it says that if any of the fund is having less than 35% of equity exposure, the indexation benefit will get wiped off. So in order to avail an indexation benefit, the fund manager has to keep at least 35% of their portfolios into the domestic equities, because of which many of the debt funds which are not carrying these 35% of threshold limits will not be able to attract or will not be able to gain benefits out of the indexation. So guys, this is a problem, or this is an issue which is there with a lot of people. So what exactly you think, would like to hear and listen from you in the comment section given below. Thank you for watching this video and coming forward for the new video very soon.